Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your weekend update of your financial markets for this Friday. And this is July 14th, 2017 at 3:20 p.m. Remember, our weekend edition is different. We look first at the monthly charts and then we look at some of the weekly charts. We don't do daily. I do the daily charts Monday through Thursday and try to give you a bigger picture for the weekend as to what's going on. I have a favor for those of you that regularly watch. Would you tell your friends about us? That's the favor. Tell them how to go look at it. The bigger our viewership gets, the better we are. We don't rely on advertising of any form, as you know. So that's the one thing that I have to see go up. Otherwise, why do them if you're not watching them? And I have to be, and I'm very proud to say it keeps going up. And that's the nice part. That's because of you and a large part to that. So what we've got are new all-time highs in the Dow. We're making new highs in the S&Ps. Not so in the NASDAQ, which has to play catch-up. The Russell, you'll see in a moment, too. Metals came alive today. And the big event of the day today, more than anything, has to do with the fact of lack of inflation that we continue to see out of the economic data. The CPI came out today. It is not showing inflation. And that becomes the problem for the Fed. Ms. Yellen can say all she wants that they're going to raise rates. And in fairness to the Fed, they still have all of August, September, October, and November to see data before they make a December announcement. As for September, the market has said, no, that's not where they're going to get that. At the same time, we have to keep our eye on what Europe's going to do. So we have a meeting coming up now in July from the European Central Bank. No one expects them to make a change there. We expect that what we will hear is at the Jackson Hole meeting, I think it's in August if I'm right, where the central bankers get together. That's what you want to see. Does he allude to anything there? And come the September meeting, a lot of people think that's where the axe may drop by Mr. Draghi as to what Europe is going to do for the Eurozone, obviously. But let's take a look at our markets and get a feel. It's amazing. I mean, since 2009-10, this market just keeps going up, and it's still doing it. Market hasn't stopped as the market keeps saying, you know, I have nowhere else to put the money. And that's what you're dealing with. Where do you put the money? So people argue, okay, well, you know, stocks are overvalued. Well, maybe some are. See, that you see rotation. And of course, the Dow is only 30 stocks, so let's understand what it's doing. But it's big 30 stocks, and they are taking off to the upside still. You've gone on from the recent break on weekly charts. That was the monthly chart. The weekly chart, you've gone from 20,414 up to right now at 21,597 on a close. That will be today's close in the futures. As we just take a look at the charts, you even have an outside week right now, and you see that on the swing line. That's going to be an outside week up. You now are going to have higher lows, higher highs. That is bullish. When we add the 18-week moving average of closes, you have to go back into mid-May, the last time you hit that, and the market's climbing. So what about resistance points on the chart? Well, one of the tools I use is called Bollinger Band. And the Bollinger Bands have a neat way of keeping the market, whether it's a weekly chart, monthly, or daily. 95% of the time, the market's going to trade within the bands. So the resistance is right here, and that resistance is 21,662. You're not quite there at this point, but you can be there like that, as you know. When we take a look at the slow stochastic reading, it is what we call embedded or locked in. So the momentum became bullish back here in early June. It hasn't given it up, and you see that in the chart action all the way through. So the swing line is up, that's bullish. The bias is up because you're over the 18-week moving average of closes, and the momentum from the oscillator called slow stochastics, bullish. When we come to the NASDAQ, it is not the same picture at all. Remember, the tech stocks got hit recently, and you see that. You have the pattern of lower highs and lower lows. So what we have there is a bearish trend on the swing line that was negated because you never were able to close underneath the 18-week moving average of closes. The two fought each other, and you have nothing, as I call it. And momentum is still pointing to the upside, but you're in overbought territory. The S&P, today you make a new contract high. You have the embedded reading. You've kept that all the way through. So those two are bullish. You don't have a clean trend because you have a pattern of a lower low and a higher high. But the other two elements are bullish, the embedded part of locked-in bullishness in the slow stochastic, and you're over the 18-week moving average, which is bullish. In the Russell, if you take a look, today you made, I believe, the new high right here. You got through 1432.20. So you're going to close against the upper Bollinger Band. Momentum is still pointing up, admittedly overbought, pointing up, and the trend is up. All things are firing on the cylinders there. In the VIX, you've been in a downtrend. Now, this is a daily chart, not weekly. I've got lower highs, lower lows, bearish, momentum pointing down, oversold, yes, but still bearish, and bias down. Now, each time we've come into these low nines, and you can see that as I go through this, you've been able to bounce away from it. Will this time be any different? I don't know, but that's what the market has done. So I won't be surprised if you down on Monday and the pros take money off the table against that lower Bollinger Band. They may have done some today. The 10-year note, fighting a battle against the 18-day average of closes. The pattern is a strange one because you've got a higher high and a lower low on the weekly chart. Therefore, there's no trend. The market is fighting a battle for three weeks in a row now against the 18-week moving average of closes. Momentum had been pointing down. It's starting, just barely starting to flatten out here, and that's why you're getting a bit of a bounce in the market, up 24.5 for the week. In the dollar index, on the longer-term weekly chart, you're just plain bearish. By the way, new contract lows today. Lower highs, lower lows under the 18-week average, which might get under the 100-week, which will add even more bearishness to the chart. And you have that locked-in embedded reading. Everything on this chart is bearish. Next stopping spot, if the market wants to drop, could be the lower band at 94.49. In the euro currency, you've got higher lows, higher highs, and embedded reading. All I can tell you is this market's still looking bullish, and it's got everything going for it. The swing line is up. You had a bullish crossover where, let me show it to you. This was last week. You're going to end up this week with higher 18-week average to the 100-day and higher highs. Everything's bullish on the chart, still pointing that you might go to 116.16. Yeah, that's quite a number. In the British pound, as negotiations start next week for Brexit, the market's liking what it sees. Part of it has to do, I think, with the idea that the British government is finally saying yes, they will pay a fee in leaving the EU. They had not said that. They said they didn't owe it. And when that announcement was made this morning, it really started kicking the market. And yes, this is a weekly chart, but you've got higher lows, higher highs, momentum pointing up, overbought pointing up. Next stopping spot, which we haven't hit for a while, could be the upper Bollinger Band at 132.17, about 80 points away. The Canadian dollar, be a bit cautious in this one. It's now got itself over the upper Bollinger Band this week, last week, and if I go to the week before, it was also over it. That's 3 weeks in a row. The most you typically do is 5. I count, if you understand Bollinger Bands, 95% of the time the market will trade within the bands. 5% of the time out of it. I count each one of these weeks as a rule of thumb. That's all it is a rule of thumb. Each one's a percentage point. That gives a 2% chance coming into this week of the market staying over whatever the upper Bollinger Band turns out to be. That's the point that I'm trying to make. In the Japanese yen, you went down to the lower Bollinger Band, held it, and now you're coming up into resistance at the 18 and 100-week moving average of closes, and there is no trend. The market's got a higher high, a lower low. Momentum had been pointing down, and you can see that right here, and now it's sort of flattening out, and that's what you're seeing on the weekly chart as well. In the crude oil market, in order for this market to get some legs to it to the upside, it's got to take out last week's high, not the week we just ended, 47.32. Ideally, close over 4,800, and you could be talking of going back in towards that $52, $53 mark. This number, I don't know what it'll do next week, the upper Bollinger Band. Momentum was bearish, and you see that right through here. Then it flattened out like I'm showing you, and it still stayed flat, and now it's starting to pick up. So I don't think you want to talk the short side of the market. Also, the 100-week average of closes has done a rather formidable job of not keeping the market under it since last November. You get a few weeks under it, but then it comes back to bite you. And that could be one of the events we're having now. Plus, you've got OPEC having a meeting about Libya and Nigerian oil production. Kuwait said that they think it's a little too soon today for them to actually get production caps. I'm not convinced that's the case, but we'll find out what's going to happen. In nat gas, the momentum is still down, sort of flattening a bit, but still to the downside. The trend is down, lower highs, lower lows. The pros, I think, took their money off the table when you hit the lower Bollinger Band, and now we'll see what happens if you can get back up to the 18-week moving average of closes and what it does. Now, let's assume you want to be an in-and-out trader. I'm talking day trader or a swing trader. You see opportunities. There's a formula to work with if you believe in these type of things. They're called pivot points. And pivot points have been around a while, but the way I explain it, I think I really make it make sense to you. First off, I start you off in one of the videos, and there's two, where I teach you the formula. And it's very simple. And by the way, as part of our services, we send out on a regular basis all the pivot point numbers every day so that you have them. But they're there on your chart. Our charting software automatically plots them. There's different charts you can use for it. You can use different time variables, a 5-minute, a 15-minute, depends which one you like. I try to cut through all that and make it easy for you and show the ones that we think most of the pros use. One of the videos I said covers all this. The next video takes you to the actual charts and shows you how to plot it and use it. I'm going to create a third video. I decided to do one tying in slow stochastics to the pivot points and teach it. But you need to get the first two videos to get to the third one. I haven't created the third one yet, and I'll send it to those that are of record, and I don't know if the others will get it. So how do you get on our list for all this? Because this is free. You call us. You can go to our website. You'll see a carousel of free offers. This is one of the offerings. You can click right on up here. If you're watching me on YouTube, you'll see their icon. Click on, the form will come about, or right underneath us at any point in time. And when that happens, you'll see click here for Ira's free offers. Again, the forms will come. So I'm Ira Epstein. You have a great weekend. I will see you Monday with our daily videos. Take care.